Tim MacIndoe.
Thank you, Mr. Speaker. Very busy. My question is to the Minister of Finance. What reports has he received on low inflation in New Zealand, and how does that benefit households and businesses?
Honourable Bill English.
Mr. Speaker, as the published figures have shown, New Zealand is experiencing very low inflation, or more accurately, in the last 6 months, actually we've had deflation. Usually, in an economy growing at 3%, inflation is rising, not falling. However, it is good news for New Zealand's households and businesses, who can expect to see interest rates and inflation stay lower for longer than they expected, and this is likely to help to reduce unemployment and sustain real wage growth.
Supplementary question.
Order. Supplementary question, Tim MacIndoe.
Thank you, Mr. Speaker. What impact does lower than expected inflation have on government revenue?
Honourable Bill English.
Well, Mr. Speaker, very low inflation and lower interest rates and lower commodity prices mean that growth in the dollar value of what New Zealand produces each year is a bit lower than expected. Treasury now expects that the dollar value of what we produce each year over the next 4 years will be around $15 billion less than forecast in Budget 2014, even though the economy will actually grow slightly faster than we expected in Budget 2014. This poses some real challenges for government revenue because it means less PAYE, less company tax and less GST. In total, Treasury expects the government will collect $4.5 billion less tax revenue over the next 4 years than it expected at the last budget.
Supplementary question, Grant Robertson.
In light of that question and answer, is it in fact correct that, quote, lower than expected inflation actually means lower government expenditure as well?
Honourable Bill English.
Well, Mr. Speaker, as it turns out, the inflation impact on government expenditure is considerably less than the impact on spending, than the impact on tax revenue. And that member better figure it out, because his other ministers are always advocating more spending when he's advocating bigger surpluses.
Order. Order. Supplementary question, Tim MacIndoe.
Thank you, sir. How is lower revenue having an impact on the government's ability to return the books to surplus in 2014-15?
Honourable Bill English.
Well, Mr. Speaker, back in December, Treasury forecast that the deficit for the 14-15 year would be around $570 million, which is just 0.2% of GDP. It's fair to say that the forecasts for the 14-15 year have deteriorated a little since December. So we expect the budget to forecast a slightly bigger deficit for 2014-15 and a slightly smaller surplus for 2015-16. So while progress is slower than expected, we remain on track to achieve surpluses and to start repaying debt.
Supplementary question.
Order. Supplementary question, Tim MacIndoe.
What steps has the government taken to get on top of spending and return the books to balance?
Honourable Bill English.
Well, Mr. Speaker, the government has been very thoughtful about its new spending and very thoughtful about what drives existing spending. And if you want a measure of that, in the last 6 budgets, the total cost of new initiatives, annual cost, has been just under $3 billion. By comparison, the last 6 budgets of the previous government totalled $20 billion of extra costs. $20 billion as opposed to $3. But despite the fact that we've had very constrained spending, we have been delivering better public services with better results for New Zealanders.
Well said.
Question number 3, Andrew Little.
Thank you, Mr. Speaker. My